Welcome, everybody, to a new analysis of Tradomics. This is the first episode of 2025 focused on stocks. So, after an introduction regarding the potential stocks that can revert to the trend in 2025 and the index analysis that was done a couple of days ago, here we are talking about six stocks belonging to the tech industry. Compared to 2024, I reshuffle a bit the companies belonging to this episode, and on top you will see another one that is coming in the next weeks will be focused on the semiconductor industry. So you will see five stocks belonging to the SOX index. Um, so that are basically in the business of semiconductors. So if you want to know more about the chart setting of those stocks, stay tuned to this channel. If you want, you can subscribe it and put a like and share the video to whom might be concerned, especially for trading or short-term investment. The methodology here reported is the cycle analysis. This is a quantitative analysis that has tremendous advantage over the technical analysis of wave analysis, because here in Tridomics we have performed different back test in order to segment the cycles based on a minimum and maximum duration, and based on the duration, and here based on the different days in which a 6-month cycle, 3-month cycle, here cycle can be completed, we can predict statistically how long the price can keep rallying either to the upside or to the downside. So this is the tremendous advantage. And every time I issued an analysis on purpose, I leave some errors, and you can check every time whether these errors are correct or not compared to other analysis or compared to the last analysis. And therefore, you can check how much precise we can be in order to forecast and predict statistically where the market goes. And this methodology, or the beauty of this methodology, is that does not depend on news, does not depend on earnings, because HFT, high frequency trading systems or algorithms, they are planned, they are set up in a way that they can buy or they can sell a certain bucket of stocks in a certain time window, and therefore they have to abide certain rules. But here we are trying to spell out by giving you chart analysis based on cycles. So having said that, let's start with the first company, which is Microsoft. So according to the last analysis, US tech stocks, here we left last month with this arrow. So exactly this is what happened. Of course, the arrow was uh, was drawn before, um, let's say, is this trend. So the analysis was correct. And here, this was the candle of the 12th of December 2024, which represented the top. And then we had an harsh retracement. So analysis correct. I removed the arrow. And here now we have to understand what has happened. So by using the cycles, here we have from this top, which is yearly upward cycle. Upward cycle means that we have a cycles that is connecting top to other tops. Here we have a 3 months cycle, T plus 3. And this second cycle has been another T plus 3. Why this is a T plus 3? Because if you use the ruler here, you can gauge basically the total duration, and the total duration was 61 days or 61 bars. 61 is a time encompassed between 48 to 89 days. Hence, we have a 3 months upward cycle that was divided in a first T plus 2, so monthly upward cycle, and a second T plus 2 monthly upward cycle. We can always um, check the duration. Here we have 32 days, and the second cycle has had a total duration of 30 days. So perfectly in line with a median duration, 30 days. as a T plus 2 is encompassed between 24 and 44 days. Now, we have had a retracement that was not just on the Microsoft stocks, but you will see there will be on other stocks as well as NASDAQ index, but also Standard & Poor's and Dow Jones. Why? Because here we have enough time to basically have a T plus 4. So 112 days is already a duration that is more than a minimum duration for a T plus 4. The wider the cycle, the harsher is the retracement, because in order to develop an upward cycle that is a T plus 3, T plus 4, T plus 5, you need a certain amount of candles, those candles that are below the stop, and such candles have to have a total amount of 2 degrees less of the grade of the cycle we are considering. Therefore, if this is a T plus 4, we need at least a T plus 2, so amount of candle that is 24, at least 24 candles below the stop in order to develop the cycles, because otherwise it's not possible to have a T plus 4. Now, if we gauge now the total duration, we have from this stop here to Friday's candle 19 bars. So this stop, it's already a T plus 3, because we have 2 degrees less, so our T plus 1 duration. So T plus 1 is 13 to 22 bars. To have a T plus 3, we have 19, hence we have definitely a T plus 3. It might be just not a T plus 3, but a T plus 4. But in this case, if this is a T plus 4, we would need another 5 days or 5 candles below this top, which we have a high likelihood to have, because I seriously doubt that in 4 days we will reach this price level at 456.16. But in any case, we do not predict what is going to happen, but we base our analysis on facts. So at the moment it's a T plus 3. I put also a T plus 4. Let's see in the next days what is going to happen. And this is the point. What is going to happen in the next week or weeks? Well, we need also to study the downward cycles. So we have to see what happened from this low. From this low here, we have a first T plus 1, and then we have another potentially T plus 1. The beginning, or let's say the sum of these two, is a T plus 2. But now we have to check the duration. So from this low here that was done on the 4th of November 2024, we have a total duration of 40 days. So this low here potentially is the beginning of a T plus 2. But we had on Friday this candle that was really close to this low. Actually, the low of this candle was done at $415, and this low here is 414.85. So for 15 cents, we did not break this low. It's important when the low is broken, because the cycle can turn into a negative cycle. So if the downward cycle is negative, then we expect a downtrend for the residual duration of the cycle. Now, the thing is that given that we haven't broken this low, if from Monday onwards we will see a push back to the upside, this low can be considered as the beginning of a monthly downward cycle. In order to develop a monthly downward cycle, we need, as for the upward cycle, a certain amount of candles that are higher compared to a low, which is in this case is this one, because we need a certain push to the upside, and then they can do whatever they want. They can do either a cycle like this, or a cycle like this, or a cycle like this. The first case is a positive, the second case is a neutral cycle, and the third one is a negative. Okay. So basically, the next week will be important because we have to carefully monitor what? We have to carefully monitor this low. So 414.85. If the low will be broken to the downside, we can expect further trend to the downside. But here, potentially, we might have a Bayer tongue, which is a connection or a time extension between a T plus 2 and another T plus 2. And this duration needs to be at 3 degrees less subcycle, which is in this case is T minus 1. So between 3 and 4 days. Do we know whether this is a Bayer tongue at the moment? So the Bayer tongue is a fake move of the market and it's not predictable. So if from Monday onwards we will see a push back to the upside, then this is a T plus 2 and eventually this is a Bayer tongue. Otherwise, if we go lower this low, then we will have a negative cycle that is not a T plus 2 but potentially a T plus 1, because for a T plus 2 such amount of candle is too little to say that this is a T plus 2. I know that it's a little bit difficult, probably it's difficult without little bit, but if you go to the introduction to the T-cycle analysis, you will have more insights that are explaining such moves. On the other flip of the coin, we will need also to do what? To eventually close without eventually, to close a T plus 2. And this closing can be done between 24 and 44 days. So this hook to the upside can start from 17th of January, even a little bit before. We need 4 days to actually have this hook up. Or it can be done also if we stretch the duration until 44 days, which means that this hook can be completed by 18th of February 2025. And in between, there is the earnings release. Okay. So that's the situation we have on Microsoft. So the market at the moment is not giving us a lot of information where the price will go because we don't have a condition in which there is a positive or negative cycle. We know that from this top here to this top, we had 15 days. So here we can have a T plus 1 upward cycles in formation or in development. We have already 1, 2, 3, 4 bars, so that's confirmed. But it's important that for the next week, this low will not be broken if here we have a T plus 2. So that's what we can see at the moment from the chart. So the next weeks will be important, and we have to see the reaction of the price because here we have a moving average 200, moving average 50, and moving average 21. Okay, so having said that, be really careful to this low and let's see what is going to happen next week. At the moment, we have also on top a total duration of 5 days. So if they wanted to close the weekly cycle by next week, then we will need another couple, at least a couple of days. And if they wanted to close a weekly cycle, considering that this low is really close to this one, then potentially we will break down this low. But if we break down this low even from Monday, this will not be a T plus 2, but potentially a T plus 1. And the condition here might be first T plus 1, second T plus 1, third T plus 1, so that we can close a T plus 3. So a T plus 3 can be done by 3 times a T plus 1 or 2 times a T plus 2. Okay. Really technical, I know, but that's the situation I see on Microsoft at the moment. Second company in focus is Amazon. So Amazon is stronger compared to Microsoft because you see that here the setup is different. So first of all, this high here was not broken up on Microsoft, but here on Amazon, we had the break with this candle. And therefore, here we have an upward yearly cycle that is positive. This break occurred after a total duration of 86 days. So the thing is that now the yearly upward cycle is basically binded to the upside. So the residual duration from here onwards will drag the price to the upside. And this is a tremendous advantage, because if we know that a T plus 5 can last at least 189 days, and here we have 86 days, then we can forecast that the price will keep running or will keep rallying at least until 189 days, which means that the price can keep going up until the 7th of April at least. But we can have also median duration. In this case, we go to Q2 2025, or we can go to maximum duration, so that we can have the rally that can be in place until, let's have a look, until 339. Well, until October, I would say, because here it's September. So we can actually climb until October. And I think this is a really tremendous advantage over other techniques. 329. So even beginning of November, okay, because here we have 329. So beginning of November, this will be the maximum duration though. You have to understand that the minimum and maximum duration have a less likelihood to happen compared to median duration, of course, because the duration is distributed by a Gaussian curve. But in any case, without going too much in technicalities, what has happened here is the following. We have had the first cycle here, t plus 2, another cycle that in this case was t plus 2 again, yes, monthly cycle. Here I was putting question mark because I was not sure whether this was a t plus 2 or something else. And the market gave us additional information. So this one is a T plus 1. It's not a T plus 2 because it lasted 21 bars. So here we can actually put the T plus 1 here. And from this top, we have to understand what has happened. So if we sum the first T plus 2, the second T plus 2, and another T plus 1, we have a total duration of 113 days, which is a T plus 4. So potentially from this top, we have not just a T plus 2, but as for Microsoft, a T plus 3, or eventually a T plus 4. Okay. So when the cycle is a T plus 3 or T plus 4, or even a T plus 2, we know how many days we can stay below the top. But considering that this T plus 5 is already positive, the expectation is to spend whatever time they want below the top. But in the end, we will keep going up. In other words, you can seize the opportunity to increase the long positions, because we already know that we will come back to the tops. And we will come back to the tops in a time that I was saying, at least by 7th of April 2025, at most November 2025. Okay. Now, of course, we will have some pauses in between, some other intermediate cycles. And also in this case, we have to study downward cycles. So from this low here to here, we have 31 bars. So we are approaching a median duration to close what? To close a T plus 2. Okay. So eventually from next week, Amazon can start already going back to the upside, or they keep also doing this other, let's say, cycle, downward cycle, and then going back to the tops. So if we take a closer look, now I show you what has happened. So first of all, let's zoom in. And from this low here to this low here, we have 5 days. So the weekly cycle was closed here on the 31st of December. Okay, so here we can put a weekly cycle, and weekly cycle is 7 days. So you can see here between 6 and 11, this was a negative cycle because the low from which it ended was lower compared to the low from which it started. And here we have another cycle. This new cycle here, weekly cycle, has last 5 days. So this is not enough. So the next week and from Monday, we might assist to another push to the downside. Potentially, we can go around the moving average 50 period dynamic support and then going back up. So we need another day of downtrend or another day in which the candle will be lower compared to this absolute low that was done on Friday, at least $216. So we might have another push to the downside for Monday or even Tuesday or Wednesday because we have 5 days. And so we can stretch this weekly cycle until 12 days, which will be on Tuesday, 21st of January, and then a bounce back to the upside. So this is basically the forecast for the next week. At least Monday or Tuesday or Wednesday, at least Monday will be enough, but Tuesdays, Wednesday potentially will be part of this weekly cycle to the downside and then push to the upside. Also because in this case, as for Microsoft, we have reached 17 bars. So after the next week, then we will need to do what? To hook to the upside, okay? Good, so that's the situation we have on Amazon. And let's see the next company in focus is Apple. So compared to the last analysis here, I was saying that from this low, potentially we could have had a T plus 2, a T plus 3 that would have pushed the price back to the upside. We should have had a retracement to close the T plus 2 and then a return back to the tops, which is exactly what happened. So of course, we have had a little bit more time to do this move. And then what happened is that we have done another push to the upside and then retracement. So you see how much precise the quantitative analysis is, or the cycle analysis. Okay, so this is something that I drew a month ago. So from this low here, we have the evidence that we have not just a T plus 2, but a T plus 3 because we have several candles lower, higher this low. So we can update the chart as this is a T plus 3. And now from this top here to this top here, we have 49 bars. 49 bars is exactly a T plus 3 minimum duration, but that's okay. So this T plus 4 has been divided in the first T plus 3 and the second T plus 3. Now here we can now put from on this top here what? A T plus 3, because we have already a certain amount of candles below the top. Let's gauge how many we have. We have 10, so this is actually a T plus 2. But if we will not go back to the absolute tops by Tuesday, then this will be a T plus 3. Okay. And this from this top here, we have a retracement of a certain importance, 10%. And 10% on Apple is not really, let's say, a negligible retracement because the Apple is not so volatile as some other stocks. And this minus 10.53% roughly represent the beginning of eventually a T plus 3, but we have also to consider where the T plus 5 took place. So the T plus 5 took place here on the 14th of December 2023. And if we gauge the total duration from this yearly upward cycle, we have 259 bars. So potentially from this top here, we might have not just the beginning of a T plus 2, not just the beginning of a T plus 3, not even a T plus 4, but potentially a T plus 5. And what does it mean? It means that if from here we have a T plus 5, the level of the price that needs to be it for the beginning of a T plus 5 is this one. So we might have another leg to the downside, and we have to break this low. So we have to go lower that low. So on Apple, the key message is that you now need to be careful, because if we are not going rapidly back towards the first moving average, which is moving average 50 period, which is this one, okay, at $238, and we are not going immediately back also to the moving average 21 at 249.61, then we might have another push to the downside. And if you want to be precise, I show you another cherry on the pie. So today I'm gonna do longer videos, but I give you more insight compared to the traditional setup. So from this low here, we have at 7 days. So from here we have another weekly cycle. Okay. Can we have also a total duration of, okay, so here eventually we have 12 days. So here from this low to this low, potentially we have a weekly hybrid cycle TH 12 days, okay? But without going to the maximum duration, given that here potentially we have a weekly cycle, this weekly cycle has had so far a duration of 5 days, because this will be considered as the new cycle. So we have 5 days. So as for Amazon, we would need to have, if this is a new weekly cycle, because I repeat, we can have also 12 days and then back to the upside. But 12 days is really the maximum duration, so like less likelihood to happen compared to the duration of 7 days. On Monday/Tuesday or beginning of next week, we need to have another candle or a couple of candles that are going lower this low. And this low is at $233. And then a push back to the upside. Okay, so that would be what I can predict on a statistical base. And here, from a downward cycle perspective, we have reached 45 days. So either here we have 33 days close, and here we have a T plus 1. And if we have a T plus 1, here we have already a negative T plus 1. So this move will be completely in line with this cycle, or eventually we have a bear tongue somewhere and then a push back to the upside. Now we have to wait whether this is a bear tongue or not. It depends what is going to happen on Monday. So if Monday we start going back towards the top, we have a bear tongue. Otherwise, we will need a couple of days more to the downside. This is in any case a valuable information because already from the opening on Monday, you need to know, or you are already aware what can happen. Okay, because here you have the price of reference and here you have the moving average. So based on Monday, we will have definitely more information on the trend that is going to be expected over the short period. Okay. On top, another thing is that we will need, in any case, more downtrend rather than uptrend because we can already start closing this T plus 5, even if here we don't have too many bars. We have 183 bars, so here we have still time to eventually do whatever they want because 183 days is not really close to, well, it's close to a minimum duration 189 days, but still they have time to do what they want. But in any case, here you have already the other flip of the coin analysis on the downward cycles. Be careful because this might be more than a T plus 3, and therefore we can expect more push toward the downside, unless we will return quickly next week, and then not just on the next week, but during the next weeks, back to the absolute tops. So that's the situation I have on Apple, and let's move to the next one. This is the chart of Meta, and compared to the last analysis, we were expecting exactly this move. So this is a T plus 3 that now is a positive one, and it's made by a T plus 2 and another cycle. I was doing, I did this arrow, I left this arrow, and actually this is exactly what happened. So again, you see that this is a methodology that is really precise and can predict statistically the price trends over the course of the time. So last analysis, I was putting this T plus 2 as a question mark. Let's see whether this is a T plus 2 or not. Gauging the total duration here, we have 20 bars. So this is not a T plus 2, but rather a T plus 1. So this T plus 3 can be segmented as, so let's see the total duration. Here we have 46 days. So 46 days is not enough to complete a T plus 3. So I would say it's not really important, but as a matter of completeness, this is a T plus 2. Okay. So then we have the right days. And this is a T plus 1. So a T plus 3 that is made of a first T plus 1 and T plus 2. And here we have another cycle. But this cycle will return back to the tops because as this is a positive one, then we need a top, okay, in the next weeks that needs to be over this price level at $637. So basically, we are expecting a new top here on Meta in the next days or weeks. And this top can be achieved in a period of 67. So we are 66 by at most 89 days. So 89 days means that this stop can be done by Friday 14. So this is St. Valentine's Day 2025. And a little bit before, we have even the earnings. So the earnings will be released on the 29th of January 2025. Okay. Another important thing of Meta is the downward cycles. So the downward cycle here is that from this low we have a T plus 5, and now it has reached a total duration of 271 bars to this low. And this low here is not just a T plus 2 because we have already several candles over the top, the low, but it's a T plus 3. And if we gauge the total duration from this low to here, we have 19 bars, so this is a T plus 1. So definitely is a T plus 3. One important thing on Meta. On Meta, potentially, we have, thanks to this retracement, so let's cancel a little bit some arrows. So let's cancel this one, let's remove this one, let's remove this one. So thanks to the retracement here on Meta, we can have the closing of this T plus 5. So this retracement is enough to close a T plus 5, because in order to close a cycle, we need 3 degrees less to the downside, or 3 degrees cycle that is negative. And from this low here to this low here, we have 40 bars. So this is definitely a T plus 2. So T plus 5 minus 3 is a T plus 2. And here we have already a negative T plus 2 cycle that can close the T plus 5. So here potentially we have the beginning of a T plus 5, not just a T plus 3. If the earnings, for example, will be positive or whatever, we can keep going up. But do they have time eventually to close the T plus 5 at the time of the earnings? Potentially, yes. So here we can have the beginning of a T plus 5. But we know that for the earnings release, there might be a triggering point eventually to close the T plus 5 even here. Because if they, with the earnings, if they start retracing to complete a T plus 2 negative, then they will have time to close the T plus 5 at the time of the earnings. But if not, so if we are not sharply going back towards this low and towards this low at the time of the earnings, then will be a T plus 5, and therefore we will continue rallying to the upside. Now, thanks to this analysis, that in the next week, we need absolute tops because we have to complete this T plus 3. Then we will have potentially a new upward cycles going down. So after the completion of this T plus 3, then bear in mind that there might be a retracement. But this retracement can be either particularly harsh for the during the earnings to close this T plus 5, or if the earnings release will not give any sign to close the T plus 5, then here we have the T plus 5. So that was done on the 21st of November, and therefore we will continue going up. So that's the situation we have on Meta. Statistically speaking, here we have, as I said, next week more room for the upside. And I leave the chart with this arrow here because this is really the key point in case this is not a T plus 3 or a T plus 5. So we have really to closely monitor this low at $548.61. So the next company in focus is Google. Here I don't have really too much to say because we have a T plus 5 upward cycle that is positive, and therefore we can continue rally until a minimum duration on 189 days. 189 days means that we can continue rally at least in the worst case scenario until 9 of April 2025. We don't care too much about the earning release because this is already a positive cycle. Therefore, we know already in advance that we can continue rally until 9 of April. But of course, this is just a minimal duration, but we can have definitely more. Regarding this last move here, we have had, of course, this was an arrow that was left intentionally in the other analysis. We have at this T plus 2 that was confirmed. the total duration here was 24 bars, and here potentially we have the beginning of a T plus 3 slash T plus 4. At the moment is a T plus 3 because the total number of candles is not enough to say this is a T plus 4. Regarding the downward cycles, here we have from this low here to this low new weekly cycle. And now we have to see on Monday whether, considering that we don't have a binded negative weekly cycle here, we have a total duration of 5 days. So Monday we can either eventually have another candle to close the weekly cycle 6 days and then back to the upside, or we can have already a push back to the upside because this is already a T minus one completed, and then we can have another T minus one, and the sum of two T minus one can make a weekly cycle. Okay, so here on Google we have more strengths compared to the other stocks, so then definitely more push toward the upside from the beginning of next week, either on Monday or from Tuesday onwards. In the end, I leave here the arrow like this, so we confirm the the settings to the upside, and here we have the beginning of a T plus 5 that was made on the 9th of September 2024. Last but not least, Tesla. What we were expecting on Tesla, a pullback. What we have, pullback. So analysis correct again. Why? Well, this is simple. We were in an overbought area, but apart this, we were also we had enough time to close a T plus 4, 111 bars. So here we had 111 bars. 111 bars is close to median duration regarding a 6-month cycle. So from this top here, we have T plus 3 or eventually T plus 4. So I put a T plus 4 here, upward cycle. I put a question mark because we don't have enough bars as for the other stocks. But here from this low, we have a total duration of 23 bars. So here we are, we have a T plus 1, but eventually if we gauge the duration from the low of the 27th of November until Friday's candle, 10th of January, we have 28 bars. So we have from this low to this low already more than enough bar to close a T plus 2. So from Monday onwards, eventually they can start pushing the price back to the upside. But as for the others stocks, because they are more or less in the same situation, um, here we have a weekly cycle that has reached a total duration of 5 days. So as for Google, because Tesla and Google are the two stocks that are stronger compared to the others, is that we have a T minus one completed, so they can start from Monday onwards either a second T minus one, or they can, for example, from Monday and Tuesday, complete the weekly cycle by going down, and then we will have enough candles to close a weekly cycle, and then back to the upside. Okay, so these are the two chances that we have on Monday. But already, given that you are aware by looking at the analysis in this channel, the probabilities already by, let's say, midday of Monday, you will know exactly what are the possibilities either to proceed to the downside or to have room to put to, let's say, continue the rally to the upside. Okay, And also in this case, here is that we have 15 days. So here we have not so many days compared to the other stock to close at T+2. So here they have eventually time to continue going down and then up. Key message on Tesla, as this T+5 was broken to the upside, is that in any case, they can do whatever they want, like this or like this, but we will return back to the absolute tops. The absolute tops is at $488. And from this level here on Friday level to the tops, we have 24%. So basically here you have upside of 24%. And this 24% can be reached according to minimum, medium, and maximum duration of a T+5. The minimum duration is 189 days. So this gain to the upside that is more than 20% can be reached by what? By 11 of April 2025 onwards. So 11 of April will be the minimum time needed to close the cycle. Otherwise, we can continue to extend the duration until summer or eventually Q3 2025. Precious insight, you know how much we can climb. And that's the situation we have on Tesla. So let's closely monitor um, the evolution of the price from Monday onwards. We have two possibilities. Either we start going immediately up, or a couple of other days to close this weekly cycle and then begin another T+2 or T+3, because from here T+4 we have 55 days. So eventually we can go to this area, moving average 50. We close the T+3 and then following the impulse for a new T+3. Okay, so that's the situation we have on Tesla. I'm not gonna leave any arrow because we have two options, but from Monday onwards you will know better where we will go. That is all. I hope this video has given you precious insights. If you wanted to share the video with whom is concerned in short-term trading or is an investor regarding the stocks that we have presented today, please share the video, put a like and subscribe to the channel. If you want to have ad hoc analysis for the stocks that are not reported in my videos, you can email me at tradomica@gmail.com. And I will give you additional information on how the private ad hoc analysis uh, works. And that is all from Dario. Thanks for watching and see you to the next episode.